maybe, Michael, we can start with kind of a 1-year update from when you actually decided to make that decision and how things have been going so far.
Well, if you roll the clock back to July, we had $500 million of capital in our treasury. We were holding short-dated treasury securities and generating effectively like 20 basis points of yield on it. We'd seen a K-shaped recovery. Wall Street came back with a vengeance. Main Street was flat on its back. It was clear there's monetary inflation. So we decided that we were going to lose a large portion of the $500 million in purchasing power if we didn't do something. My forecast then was probably like 25% inflation. And you could have got there just by looking at the S&P index. So I thought, 500 million minus 25%, like losing $125 million in 12 months is kind of like losing money at 2 to 3x the rate that the 2,000 people in the company were making money. So we either needed to give the money back to the shareholders or we needed to invest it in something. So, the thought was, well, if we're a company, a Main Street company struggling against all the lockdowns with all the uncertainty, and we are doing it minus $500 million, it feels like a university giving up its endowment as it goes into a crisis, right? So that decapitalizing the company, it was a way to give the $500 million to shareholders. They would have put it in the S&P 500 and they would have got 34% on it. If we had done that. But we would have, in essence, left ourselves defenseless without any capital. So that was one strategy. The second was invest it all. I would have bought $500 million worth of Bitcoin if I was a private company. I just would have walked out, bought all $500 million. I would have done it at whatever, $10,000 a coin. But as a public company, you got to think about your outside shareholders. And you can't, it's not like there's 10. You can't just go to the 10 of them, ask them what they want to do and get their buy-in. When you're public, you've got a shifting set of outside shareholders that are changing every minute of the day when the stock market is open. So the way that you actually handle this is a bit more sophisticated. What we did is we transparently, we telegraphed that we were looking at this. Our first press release was an announcement that we were going to buy back $250 million worth of our stock over the course of 12 months. And we were going to invest $250 million of our capital in hard assets. And we said, we're looking at everything under the sun, and Bitcoin was one of the things. So my first love of the Bitcoin community was, the way that I knew I liked all the Bitcoiners was one day later, some cyber hornet, some Bitcoiner goes, MicroStrategy is considering buying Bitcoin with $250 million. Now, as Bitcoin merged in there with gold, silver, commodities, equity, property, real estate, anything you could have imagined. But the Bitcoin community immediately picked up on that. I don't know how they do that, right? They must be scanning for this. Nobody else picked up on it. The stock was trading $120 a share. A week goes by. Literally, you announce you're going to spend $250 million and buy your stock back. You think it would move? Nope. Crickets. But the market had a week of notice. And then a week later, we stepped it up into the next gear, which is, okay, we're going to buy $250 million worth of Bitcoin. We made the decision. We're not splitting it across 6 assets, right? And it's a good thing we did, right? Because Bitcoin's up 332% in 12 months. Gold is down 7%. If we'd split it 50-50, 125 million of gold, 125 million of Bitcoin, right, it would have cost us billions. If we'd gone all gold, it would have cost us many, many, many billions. We'll come back to that in a second. So we had to do something, but the question is what? So we just picked Bitcoin. We made the decision, but we thought, this is going to be jarring for some people. Stock is around 122 at the time. Right? To put this in perspective, the company's $500 million revenue generator, generating cash flow, and we have more than $500 million in cash and about 10 million shares. So the company's trading at 1 times revenue plus cash. We give back all the cash, the company trades at 1 times revenue, the stock goes to $60 a share. right? So we're like 122. No one's really paying attention. But we said, well, maybe people think this is offensive. They're not going to like this, or it's too risky. How do you actually orange pill every one of your outside shareholders at the same time? Well, you can't. So the next best thing is we just offered to buy them out. So the idea is, if you don't like this, we're going to buy you out. We're going to post $250 million to buy back shares at a premium. So we offered to do the buyback at up to $140 a share, which is, buyout premium. If you don't like it, then you sell your shares back to us at a profit. We wait 20 days. So the market trades for 20 days. And, in the first week, the market's trading on 135. Like people, so they're not even quite sure about the buyout. Then after a while, they start thinking, they're like, well, if I can put it back to the company at 140, then presumably maybe it's worth more. So the stock trades up a bit past the 140. And at the end of the tender period, we have about $60 million worth of shares tendered. Everyone that didn't like the strategy had 20 days to sell into the open market. And if you sold in the open market above 140, then why wouldn't you? And if you're still holding the shares at the end of the tender period and you don't like the strategy, you sell into the tender. So the result of the Dutch auction is we had $175 million of extra capital. We thought about it. We put out another press release. Okay, this is our primary Treasury reserve asset. So the first notch was, this is a Treasury reserve asset. The second step is, this is the primary Treasury reserve asset. Then we bought 175 million more Bitcoin. So at that point, we're up to 425 million. The first tranche is in the 11,500 range. That was a little bit difficult. It was more difficult to do the second tranche because Bitcoin traded down. We had a loss. It traded down to into the tens, and even, you remember that. So the second tranche we bought at 10,000 something because we're committed, right? And if you go pull the Twitter stream, there's all sorts of interesting commentary on our strategy.